Kenya's economic pulse. A look at 2025. The year 2025 is shaping up to be significant for Kenya's financial markets. Several positive trends are emerging. These trends suggest a period of recovery and growth. The overall economic climate appears to be improving. This improvement is supported by various local and international factors. Investors are watching these developments closely. The World Bank has recently revised its growth forecast for Kenya upwards. This signals confidence in the nation's economic trajectory and resilience in the face of global uncertainties. It reflects optimism about policy measures and their expected impact. A key factor contributing to this positive outlook is the decrease in inflation. Lower inflation rates bring much-needed relief to consumers. They also create a more stable environment for businesses. When prices are stable, planning becomes easier for everyone. This stability is crucial for long-term investment decisions. The Central Bank of Kenya has been working to manage inflation effectively. Their efforts seem to be bearing fruit as we move into 2025. This trend is a welcome sign for the entire economy, fostering a sense of predictability. Furthermore, discussions around potential interest rate cuts are gaining traction. If interest rates come down, borrowing costs will decrease. This can stimulate investment and consumer spending further. Lower rates make it cheaper for businesses to fund expansion projects. Individuals also find it more affordable to take out loans for homes or cars. Such monetary policy adjustments can significantly boost economic activity. The anticipation of these cuts is already influencing market sentiment positively, creating a forward-looking optimism among various economic players in the country. These macroeconomic shifts create a dynamic backdrop for Kenyan investors. Understanding these broad trends is essential. It helps in making informed decisions about where to allocate capital. The interplay between inflation, interest rates, and growth forecasts sets the stage. It influences the performance of different asset classes. As 2025 unfolds, these elements will continue to shape Kenya's financial landscape. Investors should remain attentive to these indicators. They provide valuable clues about future market movements and opportunities for wealth creation. Nairobi Securities Exchange, a story of growth. The Nairobi Securities Exchange, or NSE, is showing strong signs of vitality in 2025. Investor confidence in the equities market appears to be returning. This is a positive development for the Kenyan economy. The NSE 20 index, a key benchmark for the market, has recorded impressive growth. This index tracks the performance of the top 20 listed companies. Its upward movement reflects a broader optimism about corporate profitability. Many are viewing this as a period of renewed opportunity within the stock market, attracting both local and international interest. Specifically, the NSE 20 index has surged by 8.46%. This figure is quite significant. It indicates that, on average, the leading companies listed on the exchange are performing well. Such growth often attracts more investors to the stock market. They see the potential for good returns on their investments. This percentage increase is a clear indicator of a bullish sentiment prevailing among market participants. It suggests that the value of these blue-chip companies is appreciating, which is a healthy sign for the overall market depth and liquidity. Several factors contribute to this resurgence in the stock market. The improving macroeconomic environment plays a crucial role. Lower inflation and the prospect of interest rate cuts make equities more attractive. When interest rates on savings accounts or bonds are lower, investors may seek higher returns elsewhere. Stocks offer this potential, albeit with higher risk. Furthermore, specific sectors are showing exceptional performance, driving the index upwards. The positive outlook from the World Bank also adds to the general confidence in listed firms. For Kenyan investors, the NSE's performance offers exciting prospects. It presents opportunities for capital appreciation. However, investing in stocks requires careful research and understanding. While the overall trend is positive, individual stock performance can vary. Diversification remains a key strategy for managing risk. The 8.46% growth of the NSE 20 index is a strong headline number. It encourages a closer look at the companies driving this growth. It also prompts consideration of how to participate in this upward trend responsibly. The fixed income boom bonds take center stage. While the stock market has shown healthy growth, Kenya's fixed income market has experienced an extraordinary surge. This market primarily includes government bonds and treasury bills. In 2025, the turnover in the bond market has skyrocketed. This indicates a massive increase in trading activity. Investors have shown a strong appetite for these debt securities. The fixed income market offers a different risk-return profile compared to stocks. It is often seen as a safer haven, especially during times of uncertainty or when seeking predictable income streams. The most striking statistic is the 95% surge in bond market turnover. This is an exceptionally high figure. It means that nearly double the value of bonds was traded compared to previous periods. This surge can be attributed to several factors. Initially, attractive yields on government securities drew in many investors. As the government sought to finance its budget, it offered competitive interest rates on its bonds. This high level of activity also suggests a liquid market, where bonds can be bought and sold relatively easily, further enhancing their appeal. Government initiatives have also significantly influenced the bond market. One notable action was the bond buyback program. Through this program, the government repurchased some of its existing bonds before their maturity dates. This move was aimed at managing the country's debt profile. It also injected liquidity into the market. Such proactive debt management can boost investor confidence in the government's financial stewardship. The buyback demonstrated a commitment to meeting obligations and optimizing borrowing costs, which resonated well with market participants. For investors, the booming bond market has provided ample opportunities. It has offered a chance to lock in good returns, especially when yields were high. Fixed income securities provide regular interest payments. This is appealing for those seeking a steady income stream. The increased turnover also suggests that the market is becoming more sophisticated. With decreasing inflation and potential interest rate cuts on the horizon, the dynamics of the bond market might shift. However, its strong performance in early 2025 has been a defining feature of Kenya's financial landscape. Sector success stories and investor pathways. Within the broader market improvements, certain sectors have stood out in 2025. The energy sector, for instance, has demonstrated robust performance. This can be linked to ongoing investments in renewable energy sources. Kenya is rich in geothermal, solar, and wind potential. Government policies supporting green energy also play a part. As the economy grows, the demand for energy increases. This makes energy companies attractive investments. Their role in powering national development and adapting to sustainable practices underpins their strong market position. The banking sector has also been a top performer. Kenyan banks have shown resilience and adaptability. Many have leveraged technology to improve services and reach more customers. Financial inclusion initiatives have expanded their customer base. With a more stable economic outlook, loan demand is expected to pick up. Banks also benefit from a well-regulated environment. Their consistent profitability and dividend payments make them a cornerstone of many investment portfolios. The sector's ability to navigate economic cycles and innovate continues to drive its success on the NSE. Government initiatives beyond the bond buyback continue to shape investment opportunities. Policies aimed at improving the business environment can spur growth across various sectors. Infrastructure development projects also create ripple effects, benefiting construction, manufacturing, and logistics companies. The World Bank's revised growth forecast reflects confidence in these ongoing efforts. For investors, staying informed about these government plans and their potential impact on specific industries is crucial for identifying emerging opportunities and navigating potential risks effectively. For Kenyan investors looking ahead in 2025, the landscape offers diverse options. The NSE's growth presents avenues for capital appreciation through equities. Top-performing sectors like energy and banking warrant close attention. Simultaneously, the fixed income market, despite potential shifts due to interest rate changes, remains a vital component for portfolio diversification and stable returns. Understanding the interplay between decreasing inflation, potential interest rate cuts, and overall economic growth, as highlighted by the World Bank, will be key. A balanced approach, considering individual risk tolerance and investment goals, is advisable.